Good morning, students. Welcome back. So today we plan to start with a new chapter. I would say this chapter, this sort of includes various requirements in relation to various auditing standards that we have. Okay, so let me just move on to this document first of all. Yeah, so we are moving to chapter 3. Okay, now as far as this chapter is concerned, as you must be knowing, okay, so this is all about audit planning in a way, yeah, to a great extent. Of course, some bit of execution is also we are going to discuss, but it's largely about audit planning. Now, this chapter, or you can say the combination of these auditing standards, even though they focus more on the planning side, but there are a lot of execution aspects as well, which have been touched upon. So that's why what I really find is that this chapter is more of a mixture of various auditing standards, or you can say various auditing requirements at once. Okay. So that is quite interesting. Why? Because you can have a lot of case scenarios based on some of these types of items. Case scenarios in terms of the situations, okay, wherein you can have combinations of a lot of things. Further, if we talk about this audit planning or the audit strategy, that is all a part of the planning process. And in relation to audit, I think we have already talked about that this planning process happens to be the most critical one. Okay, generally the focus of the auditor is on what? Generally, the focus of the auditor is on the execution. But that is not true. Why? Because it's the planning which is more important, one can say, which has to be more focused upon. Why? Because if the planning is not appropriate, if the planning is something, if you miss out on some of the areas over there, okay, then of course, a lot of other things may go wrong, which are linked to that. Okay, or which should have been linked at that. So that's why planning is considered to be the most essential. Fine. So with this, what I'll do is I'll just move on to further aspects of this standard. Now, first of all, to begin with, what do you need? You need some scope of work. Yes or no? Means something you need to be assigned with, because that is what you are going to work upon. Correct? And when it comes to the audit, let's suppose if it's all about audit of the financial statements, then the question arises that what is the objective? Correct? What is the objective with which the auditor is going to work? So now, as far as the audit objective is concerned, audit objective is all about ensuring that the financial statements give a true and fair view. Okay. Now, to achieve this objective, what do? You'll start with the planning. Now, in terms of planning, there are a lot of areas you'll look at. Now, what are those areas that you're going to look at? First, you will first of all find out the entity which is required to be audited. Correct? Now, in terms of the entity which is required to be audited, you will check its size, you will check the nature of the business, means the industry in which the entity operates. You will do some sort of industry comparison, means you will compare the entity to be audited with those of its peers, so that you can find out as to what has changed in the business, how the entity is behaving differently from the industry, if at all there is anything that you need to consider over there. Yeah. Now, in this case, once again, two possibilities are there. Okay, there can be two scenarios, even for this planning piece. First scenario is that you have just started off with the audit. Maybe you are appointed as the auditor for the first time. Why? Because the previous auditor has rotated, or he has moved out. Now, if that is the case, then of course you do not have any prior experience. You need to work from the scratch. Correct? You need to start from the scratch. So everything which is required to be done, you will be doing that for the first time, as far as this entity is concerned. Wherein all of these aspects you will be looking at for the first time. There's another situation. Now, what is that? That you have already audited this company in the previous year. Okay. And it's a continuation of auditing. Or maybe you have some understanding of the entities within the same industry. So that's why you have some prior experience of the industry, not really the entity. Okay. Now, in both the cases, there is something you can leverage on. Particularly the first instance, when you have already audited the entity. Why? Because a lot of aspects related to the entity, whether it comes down to its financial statements, its financial reporting, its internal controls, systems, its processes, and of course, this entire audit process, you have been through that. Yes or no? You have been through that. Now, because you have been through that, so that's why you understand about that completely. In all respects, you understand. But does it mean that because you understand, because you have done that already in the previous year, so you are not required to do that over again? The answer is no. You will have to do that again. But the point is that something that you will be required to do over again will not be the complete work. So that will only be partial. Partial in the sense that any sort of update which is there, so that you can update your understanding about that. If there is any change in the organization in terms of its structure, okay, in terms of maybe the processes, maybe entity has come up with new products. Okay. So this is what you are going to look at. Yeah, but please remember, planning is something with which you begin. Okay. And if you do not plan that, if let's suppose for any reason, if you skip the planning, then what will happen? Of course, you will be able to perform the audit, no doubt. But the effectiveness of the audit may go down. Okay. And if the effectiveness is not there, then what will happen? Of course, this will have some bearing on the outcome. Yeah, so that's why it's very important to focus on each and every aspect related to the planning. Okay, so now what we will do is, now we will try to look at all of those aspects which are required to be considered during this stage of planning. Okay, so now just move on to the 5. Just give me. Wherever you want and add to the points. Okay, so that's how we are going to now discuss. So it's not about that I am explaining some of these points. So you can say it's more of a discussion that we are doing. So we are talking about the planning. Okay. So now let's suppose there's a company which is required to be audited. Let's name this company as ABC. This is the company which is planned to be. And what is the financial year? We are looking at the financial statements of 31st March 2025. Right? So this is the financial year we are. Now, what is our objective? So we are at the planning stage. Now, at the planning stage, what all things we need to consider? What all areas we need to look at? How are we going to look at all of those areas? Okay, all of these aspects we now need to consider. All right, so now, the first step, as we discussed, will be about, to begin with, always understand the entity. Yes or no? It will always be about understanding the entity. Okay, so what is going to be our first step? Understand. To be obtained. Why? Because audit is all about verification. And for the verification, you need to have the clarity. At least that much clarity should be there, which the client is having. Because only then you can check as to whether the things are done in a correct manner or. Now, this understanding, even though you can say it's one point, it includes a lot of aspects. Because in a way, we are talking about obtaining the understanding of the entity as a whole, even the industry in which the entity is operating. Okay, so we need to know everything about the entity, its size, what are the numbers which are reported in the financial statements. Okay, how big the company is, what is the nature of the activities the company is into, what are the processes the company is involved into, how is the structure, okay, how are the operations spread out. So is it a multi-locational company, or do they have only one location? All of these aspects are going to have an impact on the audit. And please remember, we have not started the field work. Field work, do you understand? What is the meaning of field work? Anyone?
Processes of the audit processes.
See, the field work means, as an auditor, when you go to the client place, you perform the tasks, okay, or you execute the procedures. So that is what you called as work at the field work.
So, execution of the audit plan at the client place.
Correct. execution of the audit plan, performance of audit procedures when you are there at the client place. Client place is called as the field now. Okay. Now, this terminology is commonly used in respect of execution particular. You may be thinking that planning is also to a certain extent we do when we go to the client place. Yes, that's correct. But more of the planning work you will not be doing at the client place. More of that work you will be doing at your office, generally. Okay, so that's how we are going to use some of the terms. So that's why I thought I'll just discuss that with you. Now, in respect of this planning, let's try to understand some of the key activities. One, of course, is about obtaining the understanding. So we can say it's about the entity, it's about the industry. Further, it's also about its processes. Now, can you name some of the significant processes which could be there in an entity? Some of the significant processes you will find in case of the entities. Over to you. Some of the significant processes.
Say example, payroll process, payment authorization process,
Okay.
revenue recognition process,
Okay.
credit fixation of credit limit of debtors.
Okay. Anyone else?
Procurement, sales.
Procurement, very good. Sales, yes.
Sales. And
See,
any
in terms
operation.
of the processes, we are looking at significant processes. Okay. Now, some of the processes, or you can say some of the significant processes, which you find commonly at most of the entities. What are those? One, which you call as procure to pay. Means from the stage when the procurement is taking place to its conversion into inventory, if the company is involved in manufacturing, till the time the vendor from which the procurement is not done, the payment is done. So this entire process in relation to purchase, including the payment to those vendors or the creditors, what do you call it as procure to pay? So that's one process. So as an auditor, you understand this process. Why? Because only then you will get to know how the entity is purchasing. When they purchase, what are the documents they execute? What are the nature of transactions they have? What are the types of contracts they have? What are the terms they have agreed with the vendors? And how is that getting accounted for? What are the controls put in place by the management? And are they operating effectively or not? So all of these aspects in relation to a set of activities, we can say a set of activities in relation to what? Procurement. If you understand this process, that is when you get the complete clarity. See, over here, please remember, audit objective is not about picking up samples and doing a testing. Audit objective is not about verification of any type of, you can say, any sort of supporting documents. Okay, so that is not the objective in this stage. At this stage, auditor is only limited to understanding. Now, for the purposes of obtaining the understanding, for the purposes of obtaining the understanding, if the auditor believes that maybe somewhere he needs to go through some of the documents, or maybe he needs to obtain some documents in addition to inquiries or the discussions that he is having with the management, he will do that. Idea is again not to stop the auditor from doing that, but idea is not to get on to the verification. Idea is only about limiting to the understanding. Now, what are the other significant processes which you may get to see? So let me just name that. You don't need to discuss all of them. So other one is sales to collect, which is about revenue, which is about receivables, all of those aspects. Payroll again is an important process.
Record to report.
Record to report. So that is more about financial reporting, or you can say financial statement closing process. Then you have CapEx, capitalization, which will include your PPE, capital work in progress, depreciation. Some of these aspects get included. Another process which you generally find is about accruals. Again, an important process for the organization. Another process which could be there in relation to an organization could be
operations.
Sorry?
OPEX, sir. Operational expenses, we can say.
Operational expenses. Yes, that's correct. So I would say to a certain extent, OPEX or various expenses you would want to cover under the accruals. Of course, you can always have that separate, but that's how you can say we are trying to cover that. Now, please remember that some of these processes, some of these terms, some of these areas, they are not something that you will find in case of each and every entity, or you need to apply for each and every entity, or you can say that only these are the processes you will consider. In some of the entities, taxation could be an important area. Now here again, your first level of understanding about the entity and the industry, your first level of understanding about these two will give you the insights about the processes. Clear on this? And when it comes to the process understanding, please remember, you will get on to everything, including the understanding of the risks which are involved, including the controls which the management would have put in place in respect to all of those activities which are part of that particular process. Right? Now,
So policies and procedures, sir. Policies, accounting policies.
See, accounting policies, procedures, I would say that is also covered over here. Financial statement closing process. Because an entity may have this activity, which could be quite complex. that over and above accounting, they are required to put the things in the form of a financial statement. So that is what you call as financial statement closing process. It becomes all the more important aspect of those entities which have got various components in the form of, say, various branches, various units, where the accounting is also quite decentralized. So what do? As the head office or the corporate office, you are also required to do one level of consolidation to get onto the financial statements. Okay, so that is where this becomes a process. Yeah, and that is where this process will involve a lot of challenges on the part of the entity as well. Okay, now as a next step, what we have done is processes also we have understood. So we have talked about processes. Now, once the auditor has obtained understanding about all of these things, I think now he is placed in a stage when he can look at some other aspects related to his audit plan. Now, one important area in the audit plan is about the materiality. Now, what is he trying to do? He is trying to determine the material. Can you tell me what is the relevance of this materiality? I'm not asking about the meaning. Can you give me the relevance as to why is this materiality required at all? Why is this important at all? Over to you.
Say example, if the company turnover is 10,000 crore or 50,000 crore,
Okay.
in this case, if you are checking the 100 rupees, 500 rupees, that is not relevant actually. We need to constantly, we have to fix some materiality in terms of monetary amount and in terms of characteristics of the transaction. Yeah, all these things we need to consider and fix it.
But why do you do that?
To achieve the overall audit objectives.
And what is the overall objective which you will achieve by following this approach instead of following any other approach? So my point is, I need to understand that what is the relevance of this materiality? If let's suppose you do not have the materiality, what is the concern? You are saying that for a company with a huge turnover, means company which is big in size, auditor will be performing some limited procedures. Is it? Now, why does the auditor need to follow that approach?
Which is affecting the true and fair view of the financial statements. So this materiality is required.
So can you please elaborate on this point?
See, for example, as he said that 10 crores turnover is there, and if the material that anything misstatement or something is there which is affecting the financial statements in a material way, means can I say in a which is affecting more to the financial statements, making it in true and fair view is missing in that way. So that we can consider it as a material thing. And
very good. So I would say we need to go. Yes.
So the time and the resources of the auditors are limited, and
Right.
he needs to apply those resources to those areas which are and those transactions which are material, which he has to identify before the audit. So those aspects can be done in a more focused manner.
So you are saying actually auditor has got limited time. That's why this approach is required. Is it?
Not only that, sir. That is just one aspect, that he has got limited time. But
what is the most important aspect? Why do you get into the materiality? So of course you can say that auditor has got limited time. He has 20 jobs to do. So he can't spend maybe more than 3 days on every job. So that's why he is focusing on key areas. Tell me, what is your thought process?
More focused audit can be processes can be done by the auditor only when he fixes the areas which are important.
But can you please elaborate? So I again couldn't maybe what the point which you are just trying to convey, that what is the meaning of more focused audit? Can you help me with an example so that I think everybody can understand what is this more focused audit and what is it that is required to be focused upon? Because if you are looking at more focused audit, then I think to a certain extent you are talking about focusing more on certain areas and not focusing more on, of course, the remaining areas.
Sir, actually, the overall objectives of the auditor is very clear to obtain reasonable assurance whether the financial statement are free from material misstatement, whether due to fraud or error or express or opinion, whether is financial statement prepared in all material aspect as per the accepted framework reporting, auditing
Right.
framework. So the materiality is very, very important to be considered on the to achieve the objectives of audit.
Okay, so let's try to link this. Let us just go back to the objective of the audit. Okay, the very basic aspects which I think everybody knows. Now, what is the objective of audit? Audit objective says auditor needs to ensure that the financial statements are free from material misstatement. Okay, so if you read the audit objective, this is what you get over. Correct. Now it uses the term material misstatement. Now, what is the meaning of misstatement? Misstatement means any type of error. But is it about any type of error? No. Audit objective clarifies this point. It says auditor need not check each and every error. Auditor only needs to ensure material errors should not be. So that means what is the audit objective? Audit objective is to draw lines. Somewhere in the financial statements, you need to draw a line, because if let's suppose there are 20 errors in the financial statements, will that be a problem to the auditor? May not be, if those are not material. But even if one of them is material, or if all of those are accumulated, means they are aggregated and they become material, then they will become a problem to the auditor. Yeah, so that is where the relevance, or you can say that is where from where the relevance of materiality arises. Okay, that is where he needs to look at the material. Yeah. Now, for looking at the misstatements, because he needs to draw a line, so that's why, what is it that he'll do? He will determine the materiality. So he will have to now determine the material. Now, when the auditor will be performing the jobs, he will be performing the audit procedures. He'll be looking at various transactions, documents. Okay, so the conclusions that he'll form, At that stage, he need to have a clarity about the material. So that's why before he gets on to the audit procedures, what does he need? Additionally, he needs this area, material. Yes or no? So that's one. Another thing, which again comes from the audit objectives only now, some of you at times may be thinking that audit objective is all about basic aspects. Now, please understand that from that very basics of the audit objective, there are a lot of audit requirements that flow. Now, the audit objective says, somewhere in the audit objective, if you read, it says that auditor needs to obtain, okay, auditor needs to obtain reasonable assurance. Okay. To ensure that the financial statements are free from material misstatement, what does he need to do? He needs to do this. Now, this is again specified in the audit objective only. Now, the question arises, what is this reasonable assurance? Or what do you mean by this reasonable assurance? So we can say that this is again to a certain extent linked to the materiality. And I think some of your comments in terms of focused approach, in terms of looking at certain areas, in terms of, looking at some of the material items, that also comes from reasonable assurance. Now, what is the meaning of reasonable assurance? In a very simple terms, okay, the way a layman will understand, reasonable assurance means auditor is not required to check each and everything. If, let's suppose, we look at a process, say payroll. Now, during the year, company may have had, say, thousands of transactions. Even if you pick up a small company, it may have hundreds of transactions. Now, as an auditor, do you need to check that? Answer is yes. But do you need to check all the transactions? Answer is no. And how do you get to know about it? From this term reasonable assurance, it defines that auditor is not required to check 100%. Now the question arises that if he will not do 100% testing, if he'll do testing on a sample basis instead of 100%, now what will become the basis for sample selection? So one of the bases for sample selection will again come from materiality. Because something which is material should always be forming part of sample of the audit. Yes or no? Yeah. Something which is material should always be forming part of sample. So that is where we can say this materiality becomes extremely. And now all of these things, when does he need to consider? He needs to consider beforehand. Means before he'll start the audit procedures, he needs to have this clarity. Yeah. So that's where materiality is the another point which he needs to put down in his list as far as audit plan is concerned. Next. And again, one very important area, and which is more of in continuity of, I think, which some of you had just explained, and that is about focused approach. See, in today's times, when you look at the audit of financial statements, irrespective of the size of the company. Now, please remember, I'm not talking about a large company. I'm not talking about a medium-sized company. Even if you talk about a small-sized company, which has got few transactions, is the auditor expected to check everything? Answer is yes. Auditor is expected to check everything which is there in the financial statements. But does that everything mean he is required to do 100% testing? Answer is no. So that's why, what will the auditor do? If, let's suppose, these are the financial statements. Okay. Now, what is the concern of the auditor? Concern will again arise from the audit objective only. So that's why we need to go back to the audit objective again. That somewhere in the financial statements, any material misstatement should not remain. So that's the only concern. If he has taken care of that, I think his risk is gone. As an auditor, that is what he'll try to do. Yes or no? No. If, let's suppose, in the financial statements, some of these areas which I have just marked, okay, let's suppose these are the critical areas. Yeah, only the marked areas are the critical areas. The remaining areas, do they form part of books of accounts, financial statements? Answer is yes. But they are not critical. So if those are left out, will that have a significant impact on the financial statements? Answer is no. See, if the auditor is able to determine this, then what can he do? He can focus only on these areas. Focus means he can perform more work, he can have his extent of testing higher on these areas, and for the remaining areas, his extent of testing could be significantly lower. Idea is not to ignore, but to cut down. So that's how auditor can focus on those areas where the maximum problem or the maximum risk lies. By doing that, what will happen? Auditor will save his efforts, because instead of doing, say, 30 areas and spending time equally on 30 areas, now he has picked up, let's suppose, 6 areas. On 6 areas, he'll spend significant time. For remaining 24, he'll spend maybe a little time. And by doing that, he knows that for the 24 areas wherein he is going to spend limited time, even if something goes wrong, that will not be a concern. That will not be a big concern. Yes or no? Yeah. So this is what you call as risk-based approach. Now, what is the meaning of risk-based approach? The auditor is trying to focus on those areas where the maximum risk lies. He's trying to concentrate more on those areas. His effort will be more, his time spent will be more on those areas as against the other areas. In fact, to a certain extent, I think you can always relate to this. See, every time when you I think, prepare for the exams, or maybe you prepare for anything, forget the exams. What do? You'll always look at as to what is important and what is not so important. At times, even if you ignore important or not so important, you may say that, okay, in this particular topic, say in audit, these 3 chapters appear to be quite difficult. Remaining chapters are not so difficult. So what will you do? Those which are important, those which appear to be difficult to you, because difficulty, importance can always be different from different persons. Some of you may find this chapter to be difficult. Some of you may find this chapter to be very easy. So that's how you plan your work. Yeah. So something which you will find to be complex, you will say, no, I want to devote 3 days to this particular topic. For the other topics, I'll plan maybe 7 days in totality. Why? Because you want to focus more on this. Do you do that or not? Tell me quickly, everyone.
Yes.
Yes, sir.
So that is what exactly you are required to do for any other activity or any other process. Because what is an audit? Audit is nothing but a project. Actually, yeah. So, for example, if you plan a trip, that's a project for you. Let's suppose you are preparing for exam, that's a project for you. Yeah. Now the same approach or the same sort of, this strategy is what you need to pick up in case of audit as well. And is that in line with the requirements? Because somebody may think that, okay, this approach, if you pick up, is this permitted also? Means, is this in line with the auditing standards? The answer is yes. That is what the auditing standards also require. That is where they are saying that you need to obtain reasonable assurance. That is where they are saying that you need to look at only the material misstatements. Okay. Now what is the outcome of this risk-based approach? Or what is it that the auditor needs to do to get onto this risk-based approach? So now let's try to link this entire concept to the financial statements. Now within the financial statements, if let's suppose now we pick up this set of financial statements again, auditor will have 2 categories. One that is of significant items, or you can say significant areas, and the other one is of not so significant areas. Which is also called as significant risk areas. Okay, and for this, what do you call it as? Not so significant risk areas. So now, during the course of his planning, on the basis of some of these points around understanding, okay, this entire understanding which the auditor will obtain, what will he do? He will divide the financial statements into 2 categories. Some of the areas he'll say are significant to me. Why? Because therein the significant risk lies. And for some of the areas, or you can say for the other areas, he'll say, no, these are the areas which I need to audit, but these are not the significant risk areas. And that's why what will happen? His extent of testing will be higher as compared to these areas. Because during the audit plan itself, auditor needs to think about his audit procedures. See, audit doesn't mean that you go to the client place, you pick up the trial balance, you pick up the ledger, okay, you ask for the depreciation calculation, and then you think about the audit procedures. No, that is not the right approach. Right approach is that you should be thinking about this depreciation in advance at your audit planning stage, whether that is significant for you or not, and what all procedures you plan to perform in respect of that depreciation calculation, which will be linked to various assertions involved in that particular area. Okay. So now you may have a question that does it mean that auditor will write down all the audit procedures which he plans to perform in respect of all the areas? Answer is yes. Answer is yes. But please remember, this is only a planning. Okay. So that's why auditor may write down a lot of things. But even if everything is well planned, surprises may arise during the course of field work. Some of the changes may arise. Okay, the understanding which the auditor had obtained. Let's suppose auditor was discussing payroll. Okay, now during his discussion, he has understood everything on the basis of which he has designed his audit plan. Audit plan or audit program or audit strategy, all of these things are forming part of audit planning. But when he actually goes down to audit, when he is picking up the contracts, when he is looking at the transactions, when he is looking at the supporting documents, what does he find? He finds that the understanding he had obtained may be from the accountant. Why? Because the auditor was interacting with the accountant instead of payroll team. Now his understanding is different. Does it happen or not? If you have performed audit, can you relate to this point that when you go ask the client, you perform inquiries, you get some understanding, but when you eventually get down to the supporting documents, your understanding changes. Has it ever happened? Have you come across this situation?
Yes, sir.
So can you please explain what had happened? What did you obtain? How did it change? Over to you. Yes, quickly. Anyone? See, as regards this audit, I would suggest you to follow one approach. See, this audit you should not be considering as if it's a theory. Just try to link each and every aspect to the actual audit that you perform. Whether you have performed the audit or not, doesn't matter. If you have not performed any audit, let's suppose you have not been allocated any statutory audit project, doesn't matter. Just assume that if you were the auditor, okay, just think about a company, you'll go to the client place, you'll be performing certain areas. So how are the things going to be practically applied by you? The moment you do that, you will find that a lot of these aspects which will automatically come to your mind. Okay, so the whole point is that you should not really be getting into mugging up some of these areas or some of these items, because it's all about obtaining a practical understanding of how the audit is actually performed. So that way this will become more, I think, simple as far as its understanding is concerned. You will be able to connect more and you will also be able to visualize more. The more you visualize, I think the more you will be able to answer the situation based questions. Okay, so now going back to the aspect that we were discussing. So now what may happen is, let's suppose if you are auditing payroll, now you come across some different documents or maybe the change in understanding, but you had planned your procedures. Everything was linked to the assertions. You had also planned that what is significant, what is not so significant. Maybe some of the assertions you had considered significant, some of the assertions you had not considered significant. Now, when you go there, when you find a change in the understanding, do you still stick to the same audit plan? Tell me.
No, sir. We will change our audit plan accordingly.
So how do you change? Do you go back to office now? You'll say, okay, let's suppose there's a team of 10 persons. So you'll call everybody, no, see, I have found some differences. So let's go back to the office. Let's assemble. We need to replan everything. Every plan which we have prepared, we now need to change. Okay, so you'll just hold the audit maybe for next 2 to 3 days. You'll go back, change your strategy, come back. So how does it work? Can you please explain?
Only for those circumstances which require the alteration, we will do the alteration for that. Accordingly, we will work on the execute the audit planning.
Okay. Now, this means that even though we are talking about planning to be performed at the initial stage, even though we are saying that the planning has to be performed wherein the auditor needs to have a complete clarity of what is required to be done, some of the surprises an auditor may face. And in most of the cases, auditor should face surprises. In most of the cases. Yeah. So whenever the auditor comes across anything which is different as against what he had planned, he needs to keep his plan flexible. Yeah. Any changes which are required in his plan, in his audit program, he needs to now accommodate that. Or in other words, you can say that till the time the audit is not completed, this planning will continue. Yes or no? This planning will continue. Why? Because you never know as to what is required to be changed. And that's what you need to plan, because every time something new will come to you, you need to plan that. Because only when you plan, you perform. Correct?
Yes, sir.
Yeah?
Yes, sir. Say example,
yes.
The internal control is not effective as
Right.
we assumed when we are at the time of planning.
Right.
At the time of execution, the internal
Yes.
control is very weak. Then we have to extend our audit program on this audit planning.
Correct. Very good.
It's all about the circumstances and situation only.
Exactly. That's a valid point. So it's all about circumstances, situations, the new facts, the new understanding, which you may keep getting even till the last stage. Last stage means till the time the audit is not concluded. So you should not be thinking that you are somewhere at the starting stage or you are at the middle stage. We have to rehash a lot of things even at the final stages. Why? Because eventually it comes down to the audit opinion. Yeah. So that's where all of these aspects become important.
Yeah, even at the point of reporting time, see, when you are presenting, engaging team presenting that audit report for review of EQR,
right?
In that case, if he find anything to be tested further, he need evidence for substantive audit evidence.
Right.
Then definitely we need to go back and do that checking and come back and clarified.
Correct. Absolutely. Yeah. All right. So this was bit of planning, I think, that we talked about. In respect of planning, of course, a lot of things in terms of the actual situations that you come across, you'll be doing. So there's also a terminology which we commonly use: audit program, audit strategy. I'm just hoping you're clear on all of those aspects now. See, the audit program is all about putting all of these things in place. Audit strategy is all about thinking about the strategy that you will follow. Now, generally, there is a confusion, which I have seen. Generally, there's a confusion as to the difference between audit plan, audit program, audit strategy. I'm just hoping that everyone is now clear that even though these terms are different, it's part of the same process only. Okay, yeah. And eventually, the objective is one in terms of getting onto all of those things. Now let's suppose everything is planned well. Each and every area has been looked at in terms of the plan. Okay, so we are talking about the plan. Now, after the planning, what do we need? Execution. Now, this execution involves performance of audit procedures in a very simple manner. So we can say testing of controls, substantive testing, something that you call as substantive testing. Now, substantive testing means testing of details, even the analytical procedures that you perform. See, one set of analytical procedures you'll always be performing at the planning stage. Okay, you call as preliminary analytical procedures. But for each and every area, various analytical procedures that you perform, they are all what? They are all part of the audit procedures. Okay, which all comes down to execution. Correct. Now, for this execution, a lot of aspects may be required. Let's think about one of the aspects. Say the company is having strong IT systems, and in fact, there is something which applies to every company. Okay. As an auditor, what do you think? Think that IT testing is important. Okay. So there are some IT-based controls, automated controls, which are required to be tested. There are some system-generated reports, which are required to be audited, and which will not be performed by the auditor himself. Why? Because he needs to have a specialist in place. So that's why IT expert will be involved. There will be an IT expert who will be performing those procedures on behalf of the auditor. Now, even if you look at this aspect of the IT expert, okay. Now this aspect of IT expert, now this is again not something which you will do when you start your execution. Now just think about it. Say the audit has to be performed. Okay, let's think about it practically. Say we are looking at 31st March, right? Now, today we are on 3rd of July. Today is what? 3rd of July 2024. We have discussed with the management that by 31st of July, you will complete the audit. Okay, so that's why what the management has planned, management is saying, okay, fine. So let's plan that on 7th of August, we will have the board meeting when we will sign off the financial statement. So let's suppose this is the complete audit plan. So today you are on 3rd July and all of us are now sitting in office. So let's suppose we are a team. Okay, this audit plan is now under discussion. So if that audit plan is under discussion, it's good. But if let's suppose today you have actually gone to the client place, or maybe you are in middle of the audit procedures, you are in the middle of execution. Let's suppose somewhere you are in the middle of this stage. Now, do you think it will be appropriate for you to now look at who is going to be that IT expert? Now you will be planning about IT expert. Now you will be calling him. Now you will be giving him that understanding. Tell me, will that be efficient on the part of the audit team? What do you think? Considering the timeline that you have for the audit, what do you think?
Sir, actually, execution of planning is a plan of audit to effective and efficient and timely manner.
Right.
That is a execution planning.
Correct.
See here, they missed to include this part.
Right. So what should have they done? What would have been the right approach? So what did they miss out?
They should have done the digital audit earlier. Auditing of the systems, processes, IT systems.
So I couldn't understand.
No.
What do you mean by this?
Means they should have looked at the IT systems at the initial stage to understand the effectiveness of the systems and their working.
Okay.
Sir,
Yes.
in case the auditor, same auditor is continuing the existing audit,
Right.
definitely they will aware about the situation. See,
Correct.
we need to include this IT situation also. If they
Right.
are new to this, the first time
Yes.
they are doing the audit, they obviously they should confirm whether they included all the parts in the audit planning.
Correct.
Before execution. They should
Correct.
have rechecked initially.
Correct. So that means somewhere during this stage,
Yeah, they missed out.
okay, they missed out when they would have prepared their audit program, when they were involved in the planning. And that is where they need to think about everything which is required to be involved in respect of execution. Okay? To say that an expert will be involved and that will be decided upon later on. So what will happen? Of course, the audit team can do that, but that will not be efficient on their part. Because now when the IT expert will come, so let's suppose on 3rd July when they call the IT expert, So what will he do? He will go back to the same procedures, understanding of the entity, understanding of processes, understanding of significant risks. All of these things he'll now start from today. So the audit team has already done. They have discussed beforehand. Okay, so it's sort of duplication, because somewhere there has to be person in the audit team who will have to sit with the IT expert, or otherwise what they will do is they will make this person sit with the client, okay, which the client may not appreciate, because the client may say that I've already given this understanding to the audit team once. So IT expert is nothing but a part of audit team. Yes or no? Yeah. So that makes it not so efficient. So that's why each and every aspect related to audit has to be covered within the audit planning. So one should not think that involvement of experts, whether it is IT expert or any of this sort of approach which he is going to pick up, is going to be done later on. No, that is required to be done beforehand.
Sir, I think that before finalization of the audit planning,
Yes.
the audit team should brainstorm
Yes.
with the audit engagement team.
Yes.
Is there anything missed out for the audit plan?
Okay.
Then they can bring out and they can finalize it.
But how do they brainstorm? So what is the way?
See,
So what is the appropriate way? So that they do not miss out.
First, they understand the study of that entity, client, auditee.
Right. Right.
It's an environment and a business transaction. They should understand
Right.
the situation, circumstances.
Right.
Based on that, they should brainstorm and what are the potential activities involved.
Right.
If there is any specific point, they can definitely discuss with the client also.
Right.
They need to review the planning and execution differences, sir. They need to compare the planning and what is the execution done and any gaps out there, so that they can exercise, they can extend the planning in that way.
Right. So some of the ways I think one can always consider to ensure that some of the things do not get missed out. Some of these ways can always be considered. I think could again be looked at in the form of audit program. So if you have heard about checklists, okay.
Yes,
if you have
sir.
heard about,
Checklist.
Yeah, so checklist. Now what is a checklist? Checklist is all about activities or various activities which the auditor is required to perform. Yes or no? And so it's all about those activities which the auditor is required to perform. And in respect of these activities, again, auditor will have to think through. He'll have to look at as to what all activities are required to be performed or not. But on the basis of his experience, not only for this particular entity, for various other entities, he can always have a set of these type of documents. So when you say he'll brainstorm, of course he'll brainstorm. But some of these tools, you can say it's a kind of tool which he can make use of. Now, these checklists, I'm not saying that these are the one which are available or which are already prepared for him. He can always prepare that for himself. For this audit program that you have, what is that? In a way, that is also a kind of checklist. Because what is checklist? You put down, say, 50 activities and you assign the person as against those 50 activities, and the person will ensure that I am doing this work. So that is a checklist. That's a checklist for you. Correct? Okay. So every time you should be thinking that all of these things, all of these areas which the auditor is required to look at, they will all come down to the audit planning. Yeah. All right. So now I think instead of just keep discussing some of these different requirements in the form of planning, in the form of execution, I think what we can do is we can just maybe pick up some questions. And with the help of those questions, we'll just try to deep dive maybe on that particular relevant area when it comes to planning, execution, all of those stuffs. Okay. So now let me just get on to some questions now. Just okay, so if we look at this question, yeah, XWL was engaged in dealing in commodity futures trading based in Surat. Yes, that's the nature of this company. CAPE based at Delhi was the auditor. He is the statutory auditor. Auditor did not even once visit the office of this company and failed to understand the nature of the business of the company. All the documents, any papers, any records, books of accounts were received on emails and the audit was performed that way. Okay. There were also included in his working papers checklists which had a requirement of test checking of cost of raw material, cost of stores and spares. So, okay, so I think maybe some review might have been performed as regards the audit files, audit working papers. Okay, therein maybe this would have been found. There was nothing in his working papers showing the understanding of the nature of the business of the company. Now, what do you think about this approach or about this audit? Means your thoughts as regards the planning aspect. Over to you.
I think it is not at all a audit.
Okay.
See, I feel that any audit should first begin with the strategy, audit plan, and significant the scope, nature, timing, and extent of audit procedure. All these things to consider. To consider this, he has to understand that business before
Right.
commencement of this planning, timing, extent of nature, all these things.
Okay.
He has to be he has to understand the business nature.
Right.
Understand the what are the transaction and the environment, understanding the IC internal
Right.
control, how it is functioning.
Right.
All these things she should, whether it is a complexity or matter or
Right.
what is the symbol. See, whether it is a company is a big or small, it's not a
Yes.
matter.
Okay.
First of all, he has to understand the matter. Then only he can able to do the audit.
Okay.
And also audit planning should be documented. Then only if
Okay.
there is any change during the auditing, we can implement, and that changes also we can document it. I think he not done on the audit plan properly.
Okay, so I think just to continue on one of the point which you just mentioned, that I think you said that even for a small company, this is something that you'll always want to look
This
at.
is a limited. This is a limited company actually. In fact,
Correct. So it's a limited company, but we don't know whether it's a small size company or large size company. But I think you
Yes,
mentioned
yes,
one point that even for a small size company, you will want to see all of these things in place.
yes,
So
sir.
why do you think that is appropriate? Because even if you talk about a small size company, okay, to have all of these procedures, all of these processes in place, don't you think it will become very difficult on the part of the auditor?
Definitely, sir. See, actually, the plan of audit will definitely to identify the complexity of the business and to identify and assess the risk of material misstatement, if any.
Right.
See, see, without understanding the business entity, then how
Yes.
the auditor will plan it effectively?
Okay. So you're saying even for a small size company, this should be in place, is it?
Yes, sir. Yes, sir.
Okay. Anyone else? Any more thoughts on this? Yes. What about others? Quickly, anyone who would like to add to this? No? All right. So now in this case, let's try to understand as to, what is the approach and as regards the planning. Okay. So if you look at the working papers, if you look at the audit files, so what will your observation be as far as the audit files are concerned? We are not talking about the client, we are talking about the auditor, right?
Sir, also in this case,
Yes,
the working paper also do not show the understanding of the nature, which
correct.
again it's a violation actually, I believe, because no, the audit documentation and the
Yes,
working paper is the main document, the asset
right,
of the auditor.
right,
You see, the question is very clear. In this case, there was nothing is in working paper showing understanding of the nature and the business of the company.
right.
I think he grossly negliged on this part.
Okay, great. So now, as regards the working papers, let's talk about the working papers first. See, he has got some such checklists. Okay, now, like we just mentioned before getting onto this question, that the auditor needs to have some checklists in place. He needs to have some documents in place. Okay, they are very important for the auditor to get onto the audit procedures, and that will also help the auditor in terms of ensuring completeness and also ensuring that something which they have planned is also executed. Yes or no? Because if let's suppose you are planning, you are discussing a lot of items. So maybe after 2 days you forget some points. So that's why what do? You tend to write it, okay, so that you remember that this is something which is required to be done. So that's how checklists are going to help you, because all of these checklists would have been discussed in terms of what is required to be done, who will do, when is that required to be done, okay, and whether that is a significant risk area or not significant risk area. So in this case, the important aspect about the planning, which this auditor seems to have missed out, is that every client will have its unique requirements. See, audit is not a general process. Of course, there is a lot of generality, you can say, which is involved in the audit. Okay? A lot of procedures are quite general, no doubt. But audit has to be done specifically for a company by the audit. And that's why audit approach has to be specific to the company. Yes or no? Audit approach has to be specific to company always. Now, what is the meaning of that? Meaning is that while auditing a company which is involved in commodity futures trading, what is the use of having a checklist which talks about certain procedures in relation to raw material consumption, in relation to cost of stores and spares? Will that be of any relevance? Answer is no. It appears as if auditor has been using some of the checklists, maybe in relation to a manufacturing company, to this particular client. And this is only one of the observations. Yeah, by doing that, he is not specifically looking at the requirements of this particular company or the audit risks which are attached to this particular company for the nature of the business which this company is having. And that is also reflected from this statement that he has failed to obtain the understanding. So you can say this is again clearly evident. Because if you would have understood the company, then he would know that there's no point keeping these checklists. Yes or no? Yeah. Further, as we discussed, see, the audit is all about checking. If let's suppose you have to check something and you have to check whether that is right or wrong, what do you need? You need the knowledge of that. Because without the knowledge, can you check that? Can you comment that something is right or wrong? So for example, if let's suppose we are discussing this question, okay, so till time we do not have the knowledge of the concept, can we answer this? Or even if let's suppose the answer is given to us, can we comment whether that answer is correct or not? Not possible. Yeah. So in this case, what is the meaning of knowledge? See, the auditor has to have the knowledge about the thing which he is required to do. And what is he required to do? He is required to check what the company is required to do. Okay, so that's why he needs to understand what the company is required to do. It's not about auditing standards. It's not about accounting standards always. It's about their processes. Why? Because if he'll not understand their processes, how will he even think about the audit procedures? He will not be able to think about that. Or if he applies the audit procedures, then they will be all generalized the way he has done this. He seems to have used generalized audit procedures. In which case, he may miss out, he may do something, which is more of a trial and error method, okay, which is not appropriate, which is not the right audit approach. Okay, yeah. So this understanding of the entity is extremely important. And once again, even if this understanding has to be obtained, what is important? To go physically meet the client. See, if the auditor has not gone to the client place, if he doesn't meet them physically, everything is on email. Of course, a lot of information, data can be exchanged to make the process more efficient. But at least once, or at least when required, he should go there. He should be familiar with the client. He should be knowing the client. He should be knowing as to who is doing what. Yeah. So this complete clarity, when do you get? When you are actually meeting them. when you are physically meeting them. Yes or no? Yeah. So that aspect again seems to be completely missing. Okay. So that's where one can say that this audit planning misses out on some of these important aspects. Okay. So now let's understand. Auditing standard requires auditor to plan audit in such a manner that it is performed effectively. It requires auditor to establish overall audit strategy, identifying the characteristics of the engagement, okay, defining the scope, planning the nature, timing, extent of audit procedures. Yeah, all of these things are important. In the given situation, auditor didn't visit the company. Important point is he failed to understand about the business. So can we say that he followed the requirements of the auditing standard? Answer is no. Auditor has to plan the audit in commensuration with nature of the business, complexity of the business. And that is how he will also be able to identify and assess the risk. See, that's about significant risk, not so significant risk. Correct? So even if you look at the working papers, so that's again an error. Okay. Wherein, first of all, you do not find any documentation of the understanding. So how can you find when that understanding has not been obtained? So that's first error. Okay, or that you can say is one of the things which he has missed out on. Okay. So his documentation is missing. So this is the first problem. What is the second problem? Whatever documentation you find in the form of a checklist, okay, is quite generic in nature, which is not about the entity, which again reflects very poorly on his part, which actually justifies the understanding. Now, what is the understanding? That auditor has not obtained the understanding. Yes or no? Yeah. So this second point in itself, you can say, is in a way linked to the first point, or you can say the first point can always be linked to the second point. So they are all interlinked. And this will always happen. And this will make the entire audit process inefficient. Yes or no? Yeah. So this will make the entire audit process inefficient, which is not appropriate. Okay. So in this case, so this is something which the auditor didn't do. Now, let's suppose if you are the auditor of this company. Now, let's reframe this question. Can you just help me with some points which should always form part of your audit plan? Over to you. Over to you. Tell me, if you are the auditor, what will form part of your audit planning? Quickly. Yes. If you were the auditor, what will be your planning? Tell me quickly. Are you there?
Yes, sir.
Yes, tell me. So what are going to be the considerations by you as far as planning is concerned?
So we'll understand the entity.
Right.
Then in planning, we'll plan the materiality.
Okay.
And after that, we'll look at the focused approach.
Okay.
And we'll also visit the office business of the entity, business
Okay.
place, and understand on the basis of first-hand experience, knowledge. On the first-hand visit, we'll
Right.
gather whatever information is relevant about the entity, and does it require any? Does it involve any change in our plans, like something with what we had planned and what we are now experiencing on this visit? Does it require any change? We'll consider that.
Right.
So we'll ensure that our plans were, when we planned, were flexible enough to incorporate the changes that we may encounter when we are visiting the entity, and having conversation or communication with various persons to assess the entity and the materiality, and looking at the controls. So we'll accordingly plan the audit programs and strategy.
Okay. Anyone else who would like to add to this?
Sir, firstly, the SQC1,
Yes.
is there any audit procedure and policies for the
Correct.
audit planning? Is there, we need to check it out.
Right.
Based on that requirement, we have to prepare, we have to engage all the auditing team for that particular
Yes.
client. We have to
Correct.
include them to
Right.
understand and prepare the audit plan.
Correct.
During the audit plan, first we should understand the nature and timing to the extent of the planned risk assessment procedures.
Right.
So that and understand the business environment and nature of business. If
Yes.
possible, we have to visit the client place
Right.
to understand that activities in better way
Correct.
before initiating the audit planning.
Correct.
We need to consider all the facts and figures,
Right.
including say example, say purchase to pay.
Yes.
What are the activities is involved?
Yes.
On the financial statement components level, what
Right.
are the policies and other matters are involved?
Correct.
And all these aspects we need to consider, and timing is important. Also, whether we have sufficient resources, expertise to conduct this audit.
Correct.
That is also we need to look into it.
Correct. So I
And
think
quality and quality should not be compromised, and also independence of our team also should be communicated to the each team during the audit. What to,
correct.
that how to behavior also is
Yes.
matter with the client. This is with respect to team level. During the audit level, is there any see even in the during course of audit, if there is changes, the circumstances and situation changes is required the existing audit plan.
Right.
That also we need to consider. Moreover, the audit plan should be documented.
Yes.
The documentation is must. There sometimes the written documents, see orally also, if you are something is discussed,
Yes.
that also be documented in the working papers, which will help on the future.
Correct.
Yes, sir.
So I think one very important point that you have sort of related with this, and that is about the quality control, something that we discussed in our previous sessions, SQC1. And there is another auditing standard that we talked about, SA220, which is more about quality control specific to the engagement. So as an auditor, now we are looking at the engagement. So that's why all the aspects which the firm will have in place for the quality control now need to be implied, because it's an attestation engagement. Yeah. So that's what they start with. So when it comes to the planning, it involves each and every aspect. People means the team. What is going to be the number of persons? Who is going to be the team person? Means if let's suppose there is a team of 25 persons, all in all in the office. and 5 persons are required to be deputed for this audit. So does it mean that you'll pick up any 5? No. You'll think through. You will say that who is got the right skill set for this particular type of company, okay, for the size, for the areas that you are going to look at, and that's how you decide the team. Correct? And of course, various other aspects that we have already talked about, so that's why I'll not repeat it. So all of these considerations are very important on the part of the auditing. Clear? Right. So then I think we have sort of stretched a bit. So now what we can do is we can take a break. Yes. So we'll continue discussing some of these questions after the break. Okay. So let's take a break now. Okay. Right. So let's move on to the next question. CA Nikita conducting audit of a leading society engaged in promoting awareness regarding usefulness of internet among the disadvantaged sections of society through easily understandable means and methods. So I think somewhere over here, nature of the business, not really a business, but the activities in which the society is engaged, that has been explained. Okay. Society is also registered under FCRA 2010 for receipt of foreign contributions. Now, we don't need to get into this FCR. You can just simply say there is a regulatory requirement under which society is required to get registered. Because at times, if in the exam you come across any such regulation, so don't worry about it. Do we need to get into the technicality of FCRA here? No. Okay. During the course of audit, she embarked upon extensive procedures related to verification of receipt of foreign contributions to rule out round tripping in comparison to procedures originally thought of. She is documenting various procedures which are performed, including the relevant audit findings. However, she doesn't feel the need for putting into writing about how she planned the whole exercise. In this case, I think as far as this aspect of documenting various procedures performed by her are concerned, including the documentation of audit findings. Okay, so as far as this aspect is concerned, this seems to be completely okay. Correct? But for reaching this stage of performance of audit procedures, even if you look at the extensive procedures, okay, around the verification of receipt of foreign contribution, which is a critical area. So she has not skipped that. Again, she plans to do that. So as far as the execution is concerned, okay, on the basis of limited facts, things seem to be in line with what is required to be done and what she has been doing. But there's a problem. What is the problem? About the planning. Okay. So now, as regards this planning, she is not putting in writing. So can we not say that because she has documented everything about the audit procedures? So if you look at this point, yeah, all of these aspects, if she is clearly documenting, including the audit findings, which she is clearly documenting. So don't you think that will suffice? Will automatically take care of what she would have planned as far as this audit is concerned, or as far as execution of those audit procedures are concerned? Your thoughts. Over to you.
Sir, as far as the audit planning is concerned,
yes.
See, we need to put the nature of audit and timing to the extent of the risk assessment procedure and all these things. We have to be prepared and has to be discussed and reviewed and approved before they start up the any audit. And also that the audit plan should be the effective and efficient and timely manner.
Right.
See, in this case, Nikita done the audit work as per the audit plan, and she documented on that part. That is perfect. There is no doubt about it. However, she she did not feel need to putting in writing about how planned and those exercise. See, the audit documentation is must. See, she should be prepared in the paper and put it into the place. And if there is any changes in the audit plan on review, that also should be documented and need to be documented. See, as per the there is there is two things: the quantitative and the qualitative. See, quantity matter. She done everything is perfect, but she somewhere missed on her part of the qualitative matters.
Okay.
That's what I feel, sir. Thank you.
No, so I think the aspect which you talked about, qualitative, quantitative, will deliberate more on this. But anybody else would like to just answer this? That in this case, when she has documented everything perfectly as far as the execution is concerned, so don't you think it will suffice? That will automatically take care of some of the plannings, some of the planning which she would have done. Over to you. Anyone else?
Will write all that we discussed in the last answer regarding HQC1 and SA220. At the initial stage, these aspects should have been taken care of in the plan itself.
Right.
So we'll write all about the independence, the quality, the team, the engagement partners, the client assessment.
Right.
All these things have to be planned, and have to be documented. And the policies of the firm have to be there.
Okay.
On basis of those policies, these aspects will be taken care of. SQC1 talks all about this, and SA220 relating to the engagement audit. And if if there is no planning, there cannot be any review.
Right.
That review cannot be there. How will he review that what he had planned and what he has performed?
Okay. So you're saying the action plan which is there, that should be a reflection of what has been planned. Correct.
And the changes.
So if the plan was not there, how will you get to know whether everything which was required to be done or not? Okay, very good. Yes.
And it is more of a trial and error approach, or rather on the site approach that she is following, that she has reached that place and then she is performing whatever comes to the mind or as per the situation, rather than having a plan beforehand and going there and performing as per the plan and then making changes if required while performing.
Right. Okay. Anyone else? Anyone else? Okay, so now, see, as far as approach of this CA is concerned, okay, there seems to be a big gap. Big gap is about the need for documentation. Now, in relation to this entire audit process, documentation is extremely important. You can say that is essential. In fact, there's a saying that if something is not documented, that is not considered to be done. Which means that in the given case, like some of you mentioned, that she missed out on this, she missed out on this, she may have missed out on any of the audit procedure. We don't know. Yeah. Why do we don't know? Because that was not documented. It may have happened that she has planned everything the way it is required to be. And she has also executed everything as per the plan. Okay. But how will you get to know whether the execution is as per the plan or not? Till the time the plan is not documented before that, you will not get to know about it. Correct? You will not get to know about it. Okay. So in this case, two problems are possible. One, she didn't plan and therefore she didn't document. That doesn't seem to be the case. Okay, as far as the fact pattern is concerned, I don't think the concern is that she didn't plan. Concern is that she didn't document the planning. Okay, she didn't feel the need for putting into writing about how she planned the whole exercise. Means the planning was done, but its documentation was missing. Now, what is the outcome of that? Whatever she has planned is not known to anybody, or anybody will get a thought process as if she has not planned anything. Yeah. So in a way, the entire planning that she would have performed will go waste. Okay, that will be of no use. That will be of no use. Yeah. So that's why it's very, very important on the part of the auditor, of course, to plan, but also to document that. Yeah. Clear? All right. So let's understand. Auditing standard requires the requires the auditor to document audit. Also to document any significant changes which are made during the audit engagement, including the reasons for such changes. Now, documentation is essential. It will include planned nature, timing, extent of the risk assessment procedures, any further audit procedures at the assertion level. It also serves as a record of proper planning, because without that you do not have a record. Okay. Yeah. If let's suppose there was a change to audit plan. Okay, let's suppose in the given case there was a change to audit plan. Why? Because of extensive procedures which may have been required, or during the course of performance of those procedures related to verification of foreign contributions. Okay. So that is what is again required to be planned. Okay. Yeah, that is again required to be planned. Failure to document the audit plan could entail risk of not conducting audit according to professional standards in a qualitative manner. So what is the repercussion? Later on, if let's suppose files of this CA become subject to review. Okay, let's suppose they become subject to any sort of review. Then what will happen? The reviewer will not get to see the planning because that's not documented. Okay, so what will be the assumption, or what is going to be the outcome? So he'll conclude as if planning was not done. Straight away she went on to the execution, which is nothing but a non-compliance of auditing standards. Because to plan the audit is the requirement of the auditing standard, and auditing standard is mandatory. Yeah, so that may tend to amount to non-compliance of the auditing standard. Clear on this? So in the given question, problem was not that the planning is not done. Problem was that documentation
documented.
of planning has not been done. Okay?
Yes, sir.
Not documented. Okay, planned but not documented. And what is the repercussion? We will assume as if it was not planned at all. Even if it was planned, that's the thought of the reviewer.
There is another part of the question, sir.
Yes.
It says that, does she require refreshing of her knowledge? This is not answered.
Okay. Okay. So tell me, what do you think? What do you think?
Yes, she requires refreshing of her knowledge. She obviously has missed out.
Of course. Yeah. So it's like implied. So when you say it's not answered, so it's therein included, because if her understanding is incorrect, then of course she will have to refresh that. Okay. Of course, she needs to revisit. She needs to revisit what? She needs to revisit these auditing standards, because somewhere she seems to have missed out the auditing standard regarding the documentation of audit planning. Maybe she knows that the audit has to be planned, but she doesn't know that documentation is also required to be done. So that is what she needs to revisit. Okay. Clear?
Yes, sir.
All right. So let's pick up the next one. CA Saurabh, who's the engagement partner, is conducting statutory audit of BBI Bank. Okay, and I think the name of the firm of CA Saurabh is SBT and Associates. Okay. This bank has got, I think, 1034 branches spread over the country. And there are different branch audits. In respect of one large branch audited by a branch auditor, there were errors in NPA classification of many advances, which were not pointed out by a branch auditor in his report through the memorandum of changes. And if you look at the memorandum of changes which the branch auditor had reported, it was nothing was reported. Okay, so that's why what did he report? Then memorandum of changes, you can say it's about the audit adjustments. If the branch auditor believes there is some correction which is required to be done, generally in case of bank audit, when it comes to a branch, the correction is not done by the branch. Correction is done by the head office. Okay, so that's why all of these communications are made to the head office that please adjust it in the financial statements of the bank as a whole. Okay, so that's why this document is shared by the branch auditor to the principal auditor. You can say the central statutory auditor. During the overall review of financial statements of the bank, the above said errors did not come into light. Statutory auditor had also called soft copies of internal inspection reports, concurrent audit reports, as a part of his overall review procedures. However, these reports did not point towards any irregularities in such accounts. So one, it was missed out by the branch auditor. Second, internal inspection and the concurrent audit reports, they also missed out on this. Overall review of financial statements, there again, these errors were missed out. Okay. Now, in this case, would the statutory auditor of the bank be liable for above lapses? That's question number one. What precautions have to be taken by him while expressing opinion considering possibilities of such situations? Over to you. Over to you. What are your thoughts? Tell me quickly. I think forget about this first question. Huh? You may ignore this first part. If you can just move on to the second question, that as regards this risk, so there's a risk. What is the risk? NPA classification of the advances may not be done correctly by the entity. Bank is an entity only. So what should the auditor do in respect of such type of risk of material misstatement? Tell me. Over to you.
So as per SA 299, the statutory auditor will not be liable for the audit conducted by the branch.
Okay.
That is the first part.
Okay. Why are you giving reference of SA 299? Which auditing standard is this?
It's a joint audit.
Okay. So why do you want to relate this particular aspect or draw the reference to the joint audit? So do you think there is any sort of joint audit that is involved here?
No, sir, it was pointed out to us in that under 299 that it specifically was given that in case of branch office and
Yes.
corporate offices.
Right.
So the responsibility of branch will not flow to the corporate office.
Okay. So it's more about audit by a component and audit by the principal, not by the joint auditor. See, joint audit is a situation wherein one entity is getting audited by two or more auditors. Okay. So again, I would say the relevant standard for you should be SA 600, wherein the parent or the group reaches out to various components. Yeah. All right. So now, yes, I think that is one aspect about the liability. But of course, whether the statutory auditor will be liable or not, so that is going to be our secondary consideration. Our primary consideration is to take a preventive action. Okay. Now, what is it that the statutory auditor should do to take care of such type of risk? Yes, anyone else?
Sir, actually, whenever there is a component auditor, see what he will do, he will assess the materiality
Right.
for the each component.
Okay.
And see, in order to the branch, each branch, see the branch auditor himself, he will do the materiality for himself.
Okay.
And also for the consolidated level, the central branch or central bank auditor,
Yes.
he will fix the materiality for the audit as a whole is a concern.
Okay.
Yeah, he need to check the materiality aspect, whether they reported by the branch auditor or not. He has to verify in that aspect.
Okay.
That level precaution should be taken.
Okay.
And also in this given case,
yes,
he referred the internal inspection report of the concurrent audit report.
Correct.
Wherein also there is no point mentioned on this irregularities in this part.
Correct.
First of all, how the issues came into light. The NPA classification of many advances which were not pointed out by the branch auditor in his report.
Yes.
How this matter came to light? First, we understand and study about it.
Okay.
Where nature and timing and what is the materiality behind, what is the level of things, all these things we need to scrutinize first.
Correct.
Accordingly, he have to give the opinion during his statutory auditor report.
Correct.
See, here in this question is both branch auditor also is not giving the information, and
Yes.
the internal audit also, concurrent audit also, they are did not find anything.
Correct.
But however, how this NPA classification many advanced light, the statutory auditor himself deep in dive and identify how, where, and when all the situation he need to identify and report it accordingly.
Correct.
That is what I feel, sir.
Okay, great. Anyone else? Okay, so let's try to understand this. See, in this case, if you look at the checks, see, every entity will have some checks and controls in place. Yes or no? Similar to that, we have got this bank, which has got various checks and controls in place. So the first level of check is what? First level of check is the internal checks which the management will have. They must be carrying out some internal audits, which is in the form of internal inspections or concurrent audits. All of these are what? They are management controls or management checks in place. So clearly, that first check has failed. After that, you have second level of check. What is that? Statutory auditor, you could say an external auditor will come in. So it appears that second check has also failed. Okay. And then by chance you have a third check in place, which is about not that particular branch, but that is about that entity as a whole, wherein that branch may be a small component or maybe any component. So even at that level, this could not be picked up. So somewhere this has failed all the checks, right? Or you can say it has sort of, bypassed all the checks. So there seems to be a big problem. Yes.
Say example, we escaped from first level of corona, second level, third level. Now we are alive, like that.
Correct. Exactly. You are absolutely right. That's correct. Okay. So now it's a big concern for the auditor. Yes or no? Yeah. Now what is the concern? There are two types of risks which are possible. We have discussed. Significant, not so significant. But all of these risks lead to some errors, which you call as misstatement. That is again of two types, intentional or unintentional. Okay. So all of these risks are required to be considered by the auditor. Okay. Now, in this case, if you look at the requirements of auditing standard SA 600, which talks about principal auditor and the component auditor. Principal auditor is responsible in respect of the work which is required to be performed by him. Component auditor is responsible for the work which is required to be performed. When the principal auditor has to base his opinion on the financial information of the entity as a whole, relying upon the statements and reports of other auditors, what does he do? He will talk about this division of responsibility. So when you look at the audit report, he will say in his audit report that out of this maybe 1000 branches, 800 branches have been audited by somebody else. I did not audit that. I am just relying on their work. This is what you call as division of responsibility. Okay. So this is what the principal auditor does. Okay. In the given situation, if you look at the statutory auditor, nothing has come to the light of statutory auditor which would arouse his suspicion about the reliability of work performed by the branch auditor. So can we say that he was aware of this problem, but he still ignored it? Or there were some ways through which he could track it, but he ignored that? No. So we are saying first level of check failed, second level of check failed, third level of check he performed, that again failed. So as far as the principal auditor is concerned, he did everything which was supposed to be done by him. Yes or no? He did everything which was supposed to be done by him. Now in this case, it should be clearly stated in the report that 1034 branches of the bank have been audited by the branch auditors and not by the principal auditor. Thereby, what will happen? Thereby, he will clearly explain the division of responsibility in his audit report. Now, you may be thinking, but what about this error which is there in the financial statements, which could not get picked up and which might be material? So that's true. This is what you call as inherent limitation of audit. Yes or no? This is what you call as inherent limitation of audit. That despite the audit being performed, there are chances that some of the errors may go unnoticed. Okay, they may be missed out. Yeah, so those chances are there. Clear? Clear on this?
Yes.
All right, so let's look at this next one. CA Keshav Raj is conducting statutory audit of a listed company, Live with Nature Limited. So that's the company. It's engaged in producing environment-friendly niche products for newborn babies. Okay, so that's the nature of the business. There is also a well-functioning internal audit department in the company. On perusal of internal audit reports, CA Keshav, he finds that not only verification of inventories was attended by internal auditor at regular intervals during the year, but workings were also made in respect of inventory valuation as at the year end. Okay. He also attended inventory count at the year end, and no prima facie adverse inferences were drawn by him. However, going through inventory reports, he gathers that inventories are being held for considerably long period before being sold. Internal audit reports have not taken this aspect into consideration. So the question is, should he choose to rely upon inventory valuation work which is performed by the internal auditor? Over to you. Yes. Over to you, quickly. I think Ravi has a query. Ravi, I'll come to your query. Can you please answer this? Over to you. Anyone?
Sir, in this case, the internal audit report have not taken his aspect into consideration,
Okay.
which means he gathered that the inventories are being held for considerably long period
Yes.
before being sold.
Yes.
See, see, whenever the inventories count is fixed, which means the
Yes.
cycle count is
Right.
taken,
Yes.
it at least is covered within the period of 3 years. It should count all the stocks.
Okay.
See, they can plan for ABC, that
Yes.
which one is moving. ABC they can do on the priority, the 20%, 80% category,
Right.
on the high value item on the first time. Maybe
Right.
the second time they will count medium value, low value also they should count it.
Right.
But as far as, see, the suddenly looking at the one of the item is sold, which is lying in the stock long period,
Yes.
which means when their report is giving the internal auditor
Yes.
report, that time they should point out very clearly what is the moving stock, what is a non-moving stock. If it is a
Okay.
non-moving stock, then how long it is staying on the report godowns.
Okay.
I think in that part he missed out.
Okay. So this is clear that
So
internal auditor missed out.
yeah, see, considering this fact, the internal audit is missed out
Yes.
on his role.
Right.
So now the statutory auditor,
Yes.
uh, I think he has also attended the inventory count at the end of the financial year,
Correct.
and he also concluded that no prima facie adverse inference were drawn by him.
Correct. So what
I,
is the, yes. So what is your conclusion?
my conclusion is he is missed his professional activities, that negligent to the grossly, the
Okay.
professional that
Internal auditor,
yes.
you say. Okay.
Internal auditor, as well as that this, no, he has also attended the inventory count, which means that the CA, that statutory audit also is attended in that meeting count.
Right.
So he also is missed his part.
Okay.
The audit planning
Yes.
should be in such a way that the inventory evaluations to be done at least yearly once.
Yes.
That planning should cover that the non-moving item, moving item, is there any obsolescence items is there,
Correct.
that also to be looked into.
Correct.
I think there is a weakness in the audit plan,
Right.
and also the execution also there is a weak.
Right.
Yeah, that has to be addressed.
Okay. So now, given the situation which is there, how will you conclude? Should he choose to rely upon inventory valuation performed by internal
No, sir.
auditor?
No, we cannot rely upon the internal audit on this case.
Why? Why can't he rely? Tell me, why can't he rely? Anyone else?
So he should first of all assess the area and the extent of he will use the internal audit work,
Okay.
and he'll evaluate the internal audit
Okay.
function, department, the
Right.
size of the
Okay.
entity and the internal auditor,
Okay.
and the organizational policies, whether they support the internal independence of the internal auditor.
Okay.
That will be the preliminary assessment
Right.
before concluding and considering whether what areas and what extent he will rely upon the work of the internal auditor
Okay.
as per SS 610.
Okay.
And now he seems to have found out having that the inventories are being held for a long time before being sold.
Correct.
So, and the internal audit reports have not taken this aspect into consideration.
Okay.
This points out to the that the internal auditor is not it cannot be is not objective and he cannot be relied upon.
Okay.
Yes, sir. As Prashant is rightly pointed out, that as a statutory auditor, he need to confirm whether the independence is there or integrity of the internal auditor is there to be checked out. Whether he has the professional competence to have that, whether he is followed the standards on internal audit. See, even though say, as far as we are aware about that the internal auditor can be the employee or non-qualified person, whoever thinks can be, even a company also can be appointed as an auditor.
Right.
However, whether he possessed the knowledge of competence with respect to the standards on the internal audit, there is separate standards are there, whether he complied or not. That also we need to verify it, and the ethical requirement and the independence and competency, all these things to be checked out before rely upon the internal audit report.
Okay, so let me do one thing. Let me just take out this sentence. Let us just remove this. I think this is what is bothering you.
Which one, sir?
Okay, so this part I have just strike through. So if you look at this part, I have removed this from the question. Okay, so can you see the question on the screen?
Yes, sir.
Yes, sir. Yes, sir.
Okay, so I've taken out this part. Fine. Now, as far as the internal audit report is concerned, now there is no sort of deficiency.
Sir. Yeah, now it is very clear.
Now it is very clear. Now will your answer change? Should he now rely on the inventory valuation work
that
performed
part will still remain, no, sir? Before placing reliance on the work of the internal auditor, he will evaluate the internal audit function of the company.
Let's suppose he has evaluated the internal audit function. Let's suppose evaluation is done.
Then our answer will change.
So can he now rely?
After having evaluated, then he can, of course, rely.
Let's suppose internal auditor is competent. So as far as competency is concerned, they are like well versed with the valuation principles. Okay. So whatever working they would have done, that will be okay. So will you then, as statutory auditor, rely upon their work?
So there are some areas on which auditor will have to perform.
No. So forget about some areas. Let's answer this particular area, then we'll move on to some other areas as well. So in this case, will you now rely upon the inventory valuation which is performed by the internal auditor? Yes or no?
Yes, sir. This is the work using the work of other auditors.
So will you rely or not? Yes or no?
Yes, sir. We will rely, sir.
Okay, great. So I think let's move on to the solution. See, inventories in the given situation, if you look at, they are being held for considerably long period before being sold. So what does it mean? That they might be non-moving and there could be some sort of inventory obsolescence, which will have some impact on the inventory valuation. Yes or no? Because if you have non-moving inventory, that will have some impact on the inventory valuation.
Yes, sir.
Statutory auditor needs to perform the procedures directly in relation to inventory valuation. For example, procedures like NRV, inventory valuation, which involves consideration of various types of costs, any provisions to be taken. Okay. Therefore, what should the statutory auditor do? He will have to independently apply his audit procedures.
Okay, he has to jump into the audit process.
Yes, so there are a couple of aspects. See whether this is missed out by the internal auditor or not. In both the cases, can we say that the auditor can just simply rely on internal auditor? Answer is no. I think this is what we have discussed quite a lot. Expression of opinion on the financial statements is the sole responsibility of the statutory auditor, except for that situation of principal and component audit. Okay, I'm not talking about it. Can the statutory auditor write in his report that as far as inventory valuation is concerned, I have relied on the report of internal auditor? Answer is no. Can he write that? No, he can't do that. Even if he relies, who will have the responsibility? Statutory. If the internal auditor has not done the valuation correctly, statutory auditor will be responsible. If the inventory valuation has been worked out in an appropriate manner by the internal auditor, even then, statutory auditor will be responsible for not performing the audit procedures himself, for only relying on the audit report, or you can say the valuation report, which is provided by the internal auditor. Why? Because expression of opinion on the financial statements is the sole responsibility of the statutory auditor. So he cannot rely on such type of procedures performed by the internal audit. Clear on this? Clear? I think Ravi has a query. Yes, Ravi, please go ahead. What is your query?
Sir, in this question, statutory auditor has also attended the inventory, sir, verification.
Ravi, your voice is generally very low. Can you speak a bit louder?
Sir, in this question, statutory auditor has also attended the verification of inventory count, sir.
Right. So what is the question? So that's a fact which everybody knows.
Okay. Means
so what is the question?
Then means, sir, I want to say then he will also, sir, responsible if anything wrong, sir.
See, as I told you, that eventually who is going to be responsible? Statutory.
Okay.
Whether he has done inventory physical verification or not. Okay. Even if he does that, he will be responsible. Why? Because audit opinion is the responsibility of whom? Tell me, Ravi. Who has the responsibility for audit opinion?
Auditor, sir, statutory
auditor. So that means everything which is there in the financial statements has to be looked at by the auditor. Whether he is performing his audit procedures in an appropriate manner or not, that's a separate thought process. But end responsibility has to be that of the statutory auditor. To say that because he has attended the physical verification, that's why he'll be responsible, otherwise he'll not be responsible, will be inappropriate. Okay.
Sir, in last question, the branch auditor will have responsible, sir? In last question, sir?
Okay, you're saying the previous one.
Yes, sir. Branch auditor will have responsible. Yes, sir.
See, when it comes to this SA 600, which talks about, you remember there was a concept of group audit we discussed? Remember, Ravi?
Yes, sir.
Yeah. So in case of group audit, this SA 600 applies, which talks about principal auditor, component auditor. Okay. So branch and HO, that works on the similar principle. All of these branches are what? They are components. Head office is what? Corporate office. Okay. So now, if the audit is performed by the components, so as far as those components are concerned, there is a division of responsibility. because there is a division of responsibility as per SA 600. That's why in this case, principal auditor will not be responsible for the work which is performed by the component auditor. Why? Because principal auditor will write in his report that there was a division of responsibility. I was required to do X, other auditor was required to do Y. Okay, so as far as Y is concerned, I've relied upon what Y has done. Clear? Ravi, clear on this?
Yes, sir. Yes, sir. Yes, sir.
All right, so let's look at the next one. KRP Limited at its annual general meeting appointed X, Y, Z as joint auditors. Okay, for the audit of financial statements, and it's 23-24. For the valuation of gratuity scheme of the company, all the three auditors wanted to refer their own known actuaries for the valuation. Due to difference of opinion, all the joint auditors consulted their respective actuaries. Subsequently, major difference was found in the actuarial report. So you can say three valuers were involved and there were differences. However, X agreed to actuary report of Y, though Z did not. Okay, so X and Y, they were okay. They were saying, okay, let's go ahead. But there's a disconnect of these two with Z. X contends that Y's actuary report shall be considered in the audit report due to majority of votes. Now, Z is in a dilemma. Explain the responsibility of the auditors in this case regarding the report made by Y's actuary later. Okay, considering the fact that it was found to be faulty. Over to you. What are your thoughts? Quickly.
So since it is a joint audit,
Yes.
and they selected their own actuaries and relied upon their actuaries' reports.
Right.
Even though there may have been agreement between X and Y relating to the Y's actuary report,
Right.
the procedures were not followed
Right.
regarding the appointment of the actuaries
Okay.
and the manner of the reports of the actuaries and the valuation aspect carried out by them.
Okay.
So in this case, the responsibility of auditors will be there if the reports are faulty.
Okay. Anyone else?
Sir, as far as the joint audit is concerned,
Yes.
where the common work is given,
Yes.
all the joint auditor is responsible.
Right.
Yeah, when the work is divided or
Yes.
division is given to the separate joint auditor and other work is given for separate auditor, for
Right.
those areas, they are only responsible.
Okay.
That is a first one. When
Okay.
it is comes in a common, jointly or severally is responsible.
Okay.
But considering the situation in this
Yes.
KPR Limited,
Yes.
X, Y, and Z are joint auditor,
Yes.
and in the X and Mr. X, Mr. Y,
Yes.
and Z, and X agreed to Y.
Hearing.
See, Z did not, but they conducted the respective actuaries in this case, they are very well, they can conduct any expert on this matter is not a thing.
Okay.
However, he can, the Z can provide his a separate report, and
Right.
hence the Y and in this case X and Y,
Yes.
that are in the same opinion.
Right.
So they can give the reference to that is that report. They can
Right.
give the reference. It's
Right.
not a matter. Even the difference of opinion also they can go for and cross reference to their report, and he can give the conclusion.
Okay.
That's what I feel in the joint audit as far as SCA 299 is concerned.
All right. So now the situation that we have is about the auditor and the expert. Okay. So we are looking at the situation wherein some experts have been involved. Right. Now.
Yes, sir. Yeah.
Yes.
He can use the expert. Using the expert is not a concern.
But it is a
They
joint
can get when there is a joint audit, but here when there is a opinion is different, then they can report in their audit report separately by referencing to putting into the other matter paragraph.
All right. So let's look at this. See, when it comes to the audit, auditor can consider involving some experts. If you remember, we talked about IT experts. Whenever there is a need, they may consider that will they require an expert or not. So, of course, for an insurance company, because the nature of the work is such, it's quite specialized. Yeah, so that's where auditor will have to involve this expert. And all of these auditors, they also felt the need that the expert will be required. So whenever they will engage an expert, so the expert has to be an expert. Yeah, so that's why what do they need? Auditor will have to consider whether the expert is competent for that work or not. All of these factors will have to be considered, right? Now, whether the experts are involved or not, who is going to be the responsible person for the audit opinion?
Audit.
So this is something that we have discussed quite a lot. Can the involvement of an expert dilute the responsibility of the auditor? Answer is no. Audit expert is what? Audit expert is a part of team member only. Can the auditor write in his report that for the audit of say particular area I involved this expert, and that's why if anything goes wrong in this particular area, this expert will be held responsible? Again, no. Again, no. Okay, so in the given case, X, Y, Z, they jointly appointed. They were jointly appointed as the auditors. Okay, and they involved their own experts. If you say that Z is not in agreement with this report, which is found to be faulty, okay, therefore he submitted a separate report specifically for such gratuity valuation. In the given case, it was a duty of XYZ before using the gratuity valuation report to check whether that is correct or not. Because they can't just simply rely on that blindly. Auditor also needs to perform his procedures on what the expert has done. X and Y will be held responsible for gross negligence. Why? Because they involved the expert and they relied on their report, maybe, and that was found to be faulty. But as far as Z is concerned, Z did not rely on this report. Okay, clear on this? Yeah. So that's why.
Not clear, sir.
Okay. So in this case,
there is one aspect. So it is not stated that he has given a separate opinion.
No.
Question.
See, it's not about giving separate opinion or not. Let's try to understand it this way. Okay. Just give me a. See, there are three parties: X, Y, Z. These two have brought in their expert. Let me call it as A. Okay. Z has brought an expert. Let me call it as B. Now the first point is whether they can write in their reports that they are relying on the report of expert. Tell me, first point. Over to you, quickly. Yes, quickly. Are you there?
No, sir.
Can they write in the audit report that they are relying on the work of experts?
After taking permission of the experts, sir,
see, it has to be reviewed, verify whether.
Can they write this in the audit report? Yes or no? You need to answer this in yes or no.
Okay.
Answer is no.
No.
They can't rely. Okay, so let's be very clear about it. Why are you not trying to understand that end responsibility of the audit opinion is of what? Audit partner or the auditor? Who are the auditors here? So these are the auditors. So they will be responsible. Forget about joint audit. Let's think XYZ is a firm. They are relying on an expert. Can they do that? No. Okay. Now, the second point is forget about this reliance on the expert report. Let's suppose expert has produced a report. This is found to be faulty. Okay. Another expert has produced a report which is not faulty, which is good. Now, when you look at the audit procedures of Z, okay, Z would have done some procedures with the assistance of B. Is there any error found in those? Is there any error found in the outcome of those procedures? Tell me yes or no. Is there any error found? Answer is no.
So it is not given whether there are errors or not, how they have relied, whether they are correct.
So it's already given. I think you need to go through the question again.
It does not say that.
No, so that's what you'll have to assume. Why? Because it says that if you look at the report of Y's actuary, it was found to be faulty. So that means actuary who was referred to by Z, that was not found to be faulty. It's automatically implied because you will not assume that all the actuaries' reports are faulty. If they are specifying, it's clear. Yes or no? Yeah?
Yes, sir.
Okay, so now, when it comes to Z, so can we say any problem is concerned as far as Z is concerned? No. So no. Z has done his job in an appropriate manner. So should Z be held responsible? No. So let's take out Z. Okay, let's remove Z. Now the only two partners or the only two auditors whom we need to consider are what? X and Y. Now there is a gratuity valuation which has gone in the audit working papers, and that is faulty. Whether X and Y are relying on the work of A or not, in both the cases, somewhere in their work papers, if they have anything which is documented in relation to faulty numbers, so will they be held responsible for that or not? Because somewhere their audit procedures could not get a track of the fault which is there around the gratuity valuation. Yes or no? So they are at fault. Yes or no?
Yes.
So that's why who should be held responsible for that? Clearly X and Y.
Yes, sir.
Correct, sir.
Right? Clear? So there are a couple of aspects which once again I would like to summarize and which is very important for you. See, important part is not about whether they are relying on the work of expert or not. That anyways is discarded. They can't rely. If they are doing that, they are at fault. No doubt. Even if they are not relying, but if there is a fault, will they be held responsible or not? Answer is yes.
Yes, sir. Answer is yes.
Answer is yes. Now clear on this?
Sir. Yes, sir. The previous question also, the internal auditor, the same way the final responsibility with the auditor, statutory auditor only.
Correct. Correct.
The same case is applicable here also.
Correct. Absolutely correct. Absolutely correct. Okay. Yeah.
Yes, sir.
Yes, sir. Clear, sir. Thank you.
All right. So I think with this, we can just conclude our discussion. Any questions, any doubts that you may have, we can discuss that before we wind up. Over to you. Any questions, any doubts?
No, sir. Thank you so much for explaining all the cases in deeply and in the understandable manner, and explaining with the examples, really, which help us to understand the subject in more clear. Thank you, sir.
Sure.
Thank you very much.
Sure. Thanks to you also, in fact, for this time and for this wonderful participation you have shown. All right. So I think we can then close this session.
Yes, sir.
All right. Thanks. Ashok, we can close this. Thank you.